And hello, this is a Squawkonomics interview in Chiang Mai, Thailand with Marc Faber. He's the editor of the Gloom, Boom, and Doom report, and he's also the chairman and shareholder of various frontier market research and investment funds. Marc, thank you so much for...
My pleasure.
Yes. Thank you so much for also having me in your office.
My pleasure.
I would like to say that, I just got back from Singapore, and the thing that we were recently doing with Squawkonomics had to do with we would ask people on the street what they thought about gold versus Bitcoin. Mm-hmm. So if you were vacationing in Singapore and I happened to see you on the street and I said, if I gave you a chance to walk away with this piece of gold, about 2.5 grams or so, or the equivalent value in Bitcoin, which one would you pick?
Well, I would pick the gold coin.
Overall?
Yes.
So you don't see anything redeeming in Bitcoin, or do you think?
No, I think Bitcoins or something similar have a lot of merits, because in theory you could purchase a Bitcoin here in Thailand, and then you travel to the US or to Britain, and with that Bitcoin you can buy goods. Mm. I am not sure in future whether it will be possible to carry gold from A to B, you understand? Mm-hmm. Or even to transfer money from A to B, that I'm not sure. Mm. But gold and Bitcoins are two very different type of currencies, in the sense that gold will always have some value. Mm. Bitcoin will have value as long as there are exchanges and as long as people accept it. And we had some problems with Bitcoins on various occasions in the last 6 months. Mm. So I prefer to hold physical gold. Okay. But I'm aware that if I have physical gold, say, in the US or in Switzerland or in Singapore, I may not be able to carry that gold from Singapore or from the US somewhere else. So I'm aware of that.
So it's very important where you hold it.
So yes, I think you would have, as a prudent investor, you would have to diversify the custody of your gold holdings. In other words, you would have to have some gold in Hong Kong, and some in Thailand, and some in Europe, and some maybe in Australia, probably not in the US.
Okay. Very interesting. And I think, capital controls and other things could really accelerate that even further.
Yes, could be the case, yes. Mm.
So I wanted to ask you, getting into things, we always hear about, when is the frontier market going to turn into emerging market? When is the emerging market going to be qualified as a developed market? But what about the opposite? I mean, we're having less than stellar performance in developed markets. I mean, could we feasibly see some developed markets being downgraded into emerging, and emerging downgraded to be a frontier market?
Yes, throughout history, some civilizations have come up, and others have gone down the tube. Mm. This is the pattern of the cycle of civilizations. Is also, there are cities that came up and became very wealthy, like Venice, and then they decayed. Or take Detroit in the 1920s. Sure. It was probably the world's richest city. Today it's a disaster. Mm. So happiness never stays long in one place. That is an observation by Herodotus. Oh. But in general, what I think is happening, and this is very interesting, we have very slow growth in the Western world. We have numerous problems in the Western world, but we have the printing press. Mm. And as a result of that, since 2010, the US stock market has vastly outperformed emerging markets for a variety of reasons. And the question obviously then arises, this outperformance, is it sustainable? And if today you were to structure a portfolio, would you buy the US? Or would you rather buy the emerging markets that are, from a valuation point of view, and also from a point of view of say, economic growth prospects are much more desirable.
Very interesting. Very interesting. I'd like to move on to. We just did an interview with David Moskowitz of Coin Republic and Bitcoin Singapore, and he was talking about how roughly 90% of Cambodia is currently unbanked, and there are moves from people with and organizations with means to bring a cryptocurrency solution to Cambodia to solve the unbanked problem. And I'd like to kind of just throw an idea out there and just see if you think it would be viable or not. As far as Bitcoin IPO anywhere in the world, I mean, NYSE, it's just not there yet. And if you think about it, if there was a Bitcoin IPO, it would be remembered in a week or two and it would be forgotten next because there's tons of IPOs that go on. There are tons of stocks in the U.S. market. But what about an IPO in a frontier market as far as the first or the second or the third IPO of that country being a Bitcoin IPO?
Well,
that would be a part of that nation's history, wouldn't it?
Bitcoin ETF is being launched. But as I said, I have nothing against Bitcoin. I think the concept is brilliant. It's a really brilliant concept because it bypasses essentially the banking system. But equally, Bitcoins, they have value. That value is expressed in US dollars. So it's not really that you buy things with a Bitcoin. You exchange it essentially for US dollars and then you buy something. And so the value of Bitcoins will obviously fluctuate as well as the value of the US dollar. And if someone tells me, oh, in Cambodia or in India, only 10% of the people have a bank account, then I would assume that these people are not capable to actually transact in an encrypted currency. You understand?
Even more complex.
I rather think that in societies that have very limited banking services, that gold is essentially a very important money or way to transact.
Sure.
Say in Vietnam, when people buy a house, they frequently buy it with physical gold. And equally, I think that over time, people will have bank accounts. I mean, that's why the banks in frontier markets are relatively So I don't know. I mean, I'm open-minded towards Bitcoin. I'd like to point out that there can be competing Bitcoins that may be called differently, but in principle, many people can start something.
And that would create, a lot of inflation, whereas you can't come up with another form of gold to store it on the market.
I'm not sure whether it will create a lot of inflation, but it will be like different currencies. They will compete with each other. And we had in the 19th century in America and also in Britain, banks, they issued their own money. So each bank had its own banknotes.
Kind of like
so it is possible. But as I said, my investments are limited to essentially physical gold, cash, real estate, equities, bonds, commodities.
Okay. Interesting. You just mentioned Vietnam, and that was good that you mentioned that because I wanted to ask you about that. And I was not aware that people were buying houses with gold in Vietnam, so I find that very interesting because I was there when there was a Asian Commercial Bank had that meltdown during that summer. And I saw everybody rushed to the gold shops because they got out of the bank as soon as they could, and they changed over to gold as much as they could. So we're seeing manufacturing moving from China to Vietnam. This is obviously going to be a benefit to Vietnam. However, Vietnam, are they going to be able to sustain? I'll just work for you.
Yes.
So I'd actually like to do the same thing. So you got used to no air conditioning, huh?
Yeah, in the evening it's cool here, and I use the fan usually, but I didn't switch it on now.
Okay.
Switch it on.
No problem. I'll make a second video. I lived in Taipei for about a year, and I don't know what real hot is. And I just came over here, my body hasn't gotten used to it, so I'm sweating left and right. Okay, so you are headlining the Vietnam Investment Forum next month, and I'd like to ask you about the manufacturing moving from China to Vietnam. As far as Vietnam, does it have the momentum able to sustain amid what's happening with the South China Sea tensions and other challenges that are facing the Vietnamese economy, or are those economic benefits, you think, in your opinion, set to be taken away by Indonesia or some other country?
I think, in general, the Vietnamese economy is performing very well. I mean, we had problems in the last 4 years. The stock market collapsed, property prices dropped 30-40%, but equally there was also deleveraging in the system. So, as of today, the Vietnamese economy is actually in a remarkable good condition. And this is not only my view, this is also the view of some, say, economists based in Southeast Asia. Now, the stock market has performed well over the last 3 years. Last year it was up something like 25%. This year, to its recent peak, it was up more than 15%. And now, following the tensions in the South China Sea, the stock market has given back its gains for the year, so we're flat for the year. But in general, I would say that Vietnamese stocks, unlike other stocks that are in a topping out process, Vietnamese stocks are in a bottoming phase. In other words, who knows? They may not move for a year, they may recover, but the valuations are very attractive for Vietnamese shares. Now, the problem of the country is that the government is still very bureaucratic. They have to privatize, but I believe that gradually they realize that in order to get some more economic momentum, the government has to step back, and the private sector has to expand, and the government sector has to contract.
Very interesting. Very interesting. I'd like to pull back and do, ask you a question as far as macroeconomics, something that's probably going to, impact all these markets. China, Iran, Russia, they're having more and more movement towards divesting towards away from the U.S. dollar. Then we've got the Holy Grail oil deal that Russia says is about 98% done, and about the oil will start flowing in 2018, according to Russia. On top of that, we have some interesting facts suggesting gold and silver fixing in London. What's the big picture here? Are we looking at decreased USD usage in the world? Are we looking at the role of the London Metal Exchange being perhaps replaced by Shanghai or New Delhi or Moscow?
Well, in general, I believe that if you look at the weight of the European and the American economy within the global economy, and you look at the weight and the importance of emerging economies within the global economy. So a trend has been very clear for the last 20-25 years, and this is the diminished importance of the Western economies, the US and Western Europe, within the global economy, and a rise in economic clout of emerging economies led in particular by China. And with China, the demand for resources increased, so the economies that supplied the resources also improved significantly. So in general, I think as the US economic hegemony diminishes, and eventually it will vanish the way British hegemony vanished 100 years ago, other countries will become more important, and this will have obviously not only economic consequences, but in my view, geopolitical consequences.
There's bound to be some US pushback against that.
Well, we have the neocons in America, and the Americans, they believe in meddling into other people's business and so forth. They're not going to retreat just like this. but it should be clear, why do we have tensions at the present time in Asia? For China, the number one consideration strategically is to always have access to resources. Oil from the Middle East, iron ore, copper from Australia, and so forth. No resources, no economy in China, period. And they know very well that they are encircled by American military and naval bases around Asia, Okinawa, Philippines, Singapore, and so forth. The Americans even have troops here in Thailand. So the Chinese, with this pivot to Asia, as suggested 1.5 years ago by Mrs. Clinton, they feel threatened. And it's interesting that the tensions with Vietnam broke out in early May, following the agreement with the Philippines that the US could station essentially an unlimited number of troops in the Philippines. I mean, I'm not God. I'm not here to judge who is right and wrong. But if I were China, and if you look at geopolitics in Asia from a Chinese perspective, it's completely unacceptable in the long run to have American military presence in Asia. The way for the Americans, it's unacceptable if there was a military presence by China or Russia in the Caribbean, in Mexico, in Canada. I mean, that Americans can't see that is beyond me.
It's just, you want to...
It's the still arrogant Western attitude of imperialism and control everybody.
And especially when you're in your own backyard, you'd like to at least
of course,
your own backyard.
Of course.
I can understand that.
And you can, as a large power like France and Britain and America, you may be able to push around small countries, but you can't push around the country that has a population twice the size of Europe and the United States, has become a relatively modern state with military that is very powerful.
Interesting. Since we are on the geopolitical topic, I do want to bring up Ukraine and the fact that all the strife happening there. It's been spurring people like Michael Hassenstadt from Templeton, as far as investing about $8 billion in Ukraine bonds over there. How do you think that's going to work out for him? Would you consider Ukraine to be a good frontier market at this time? And would you be looking at
those stocks are very cheap in Ukraine, and bonds, if they get paid, are also cheap. But they are moves that maybe the Western powers will kind of bail out Ukraine. But I mean, I don't think that personally I would be now interested to make a lot of investments in Ukrainian bonds.
Okay.
Because it's a political decision. The West has to bail out Ukraine. The cost of the complete bailout is going to be somewhere like $50 billion. Will they really be willing to pay that? I'm not sure. So I would be reluctant personally to buy Ukraine bonds. But a year ago or 2 years ago, I wouldn't have bought Greek bonds, I wouldn't have bought Spanish bonds, I wouldn't have bought Italian bonds. And these were fabulous investments. So, there's always a risk if you buy $8 billion worth of Ukraine bonds, if you manage 200 billion, it's an acceptable risk. I would maybe also put a few percentage points in Ukraine bonds, but I'm not interested at this point.
Okay. So,
but I own some Russian bonds.
That was the next question I was going to ask you. If you were given the choice, you would go for Russian or Ukraine bonds?
Yeah, I own Russian bonds because I think the financial position of Russia is actually quite good.
Very low public debt to GDP.
Yes, exactly, and the budget is essentially balanced and so forth. They will go into recession, and there are some issues in Russia. Corporate governance is not particularly good and so forth. But I feel reasonably confident. And again, as I pointed out earlier with my remarks about geopolitics, I mean, the Western world should realize that Ukraine, in particular Eastern Ukraine, is for Russia of great strategic importance. It is not of strategic importance for Western Europe, but for Russia, especially Crimea, is very important. And that the Western powers don't see that and just go and meddle, and there is proof that they were meddling in Ukrainian affairs against the Russians. And so one day, Russia is also a powerful nation, someone puts down the foot and says, no more. That's the red line.
Just like in Syria.
Yeah, sure. And, the Russians and the Chinese, they've seen repeatedly encroachment on their business or economic interests in the Middle East, in North Africa, in Africa, and so forth. So at some point, they say to themselves, well, how far are they going to go?
That's a $64 million question.
Yes.
There. In Syria, they're starting to rebuild, and we're looking at cities like Homs, where the locals are returning. They see completely destroyed landscapes, but they're getting hammered together and they're trying to rebuild their communities.
Yes.
Having said that, now that we're at the rebuilding stage, would you be looking at Syrian bonds now that it looks like perhaps the worst could be over there?
Again, I'm not so sure, but I own an investment in Iraq. I invest through a fund in Iraq, and I've been to Syria and I've been to Iran. I haven't been to Iraq, but it seems to me that the Iraqi economy has, favorable fundamentals. There are problems,
sure,
but they have less problems than Syria.
Sure.
Because they have oil. Syria doesn't have much oil.
Yeah, and you're getting...
Maybe they'll get gas one day and so forth, and maybe they get some pipeline income and so forth and so. But in general, I have not a great economic confidence in Syria. I have, however, a very high opinion of Syria as a country to visit. It's one of the most interesting countries historically in the world. Yes. Damascus is the oldest city in the world that has been continuously inhabited, and you have essentially the whole Bible story in Syria, and the Crusades, and the Islamic invasion, and. So it's really a fascinating country. It's enchanting to visit, and you can drink and smoke everywhere. It's not a problem like in some other Middle Eastern countries.
Sounds like a nice destination. And you mentioned Iraq at length. When I was in Singapore, I saw some people where I figured I would get a little more interesting answer, and I asked them if they would take gold, Bitcoin, or 10,000 Iraqi dinar. Because I wanted to see if they could make a connection between rising oil production and the total collapse of the currency. Do you think that there can be any situation economically where we're talking about these currencies just you can say it's the spiral to the bottom and all of these things, but is there a point where there's kind of like a resurgence period where collapsed currencies kind of regain their confidence? Could it come from increased oil production or increased other economic activity? Could you be looking at a return from these collapsed currencies?
Yes, I think the Iraqi dinar, has been relatively stable and has actually appreciated somewhat from the lows against the US dollar. I have no great faith in any paper currency. I, of course, have cash, but I don't have great faith. And have more faith in holding gold, but I wouldn't put all my money into gold either. So, the question is, how much do you weigh into each investment? But if you approach me on the street and you say, here are some Iraqi dinars or here is some gold, the equivalent value, then I take the gold, personally.
Okay, interesting.
But if you came to me and said, here is a portfolio of Iraqi stocks and here is gold, I would say maybe I take some Iraqi stocks, as I have. I have an investment in the Uncut fund.
Interesting. I noticed you also, when you were talking about encroaching upon China and Russia, you were talking about Africa. So I wanted to also talk about Africa. I think the 2010s we're witnessing a developing Africa that had never been seen in our lifetime. It was a concept that was previously ignored, and now it's looking to be a more, ever-increasing investment destination. It's got its problems, but it's got its things that are good for it. You've got Djibouti that's aiming to be the port of East Africa. You've got Dorle Investment Port. You've got backing from the Chinese. You've got backing from, I believe it's Dubai World. You certainly have backing from the UAE in that case. And it's going to have a wide deep port that's going to basically bring in the goods. It's going to be connected to a railroad, through Djibouti to Ethiopia. And the whole idea is, all the imports and exports from East Africa is slated to go through Djibouti for this reason. So it's possible.
Yeah, it will take a while to build the railroad.
It will.
But I believe they can do it.
Mm-hmm.
Now, first of all, there were repeated periods in history when people thought that Africa would come and become a prosperous continent and so forth. The strengths of Africa are the resources. The weakness are the population, basically. And we have throughout Africa basically also political tensions. So I'm not sure that Africa will become, it's not going to be another Southeast Asia, where you have had countries like South Korea, North Asia, Taiwan, and then Hong Kong, Singapore, Malaysia, Thailand, and so forth, growing very rapidly for a period of time. That is not going to happen in Africa. So, secondly, I would like to point out that I invested already in Africa in the early 1990s, in Kenya, and also in Morocco. And Miles Morland, he had an Africa fund for the last 20 years or so. And so it's not something totally new investing in Africa. Okay. Some people have done it actually for quite some time. But I concede that with the rise in resource prices and the, let's say, supply constraints, the Chinese have developed a great interest in the African continent. And whereas 20 years ago, American trade with Africa vastly exceeded Chinese trade with Africa, today, trade between China and Africa is twice the size of the US-African trade.
Sure.
And unlike the US, that just goes and it essentially exploits resources and creates trouble, the Chinese, they actually go and build bridges and trains, railroads and tunnels and the infrastructure. So they actually bring something. They're not the most popular people in Africa because the locals suddenly see that some people work very hard and achieve something, whereas they don't do very much.
I was thinking before, if you take an average workday of, you take a person from each country and you look at how they work in one day, and then you extrapolate that across the population, I can see how you can come up with that there are some countries that just are not going to reach that level of productivity that other countries are.
Absolutely. You're not going to have a lot of semiconductor manufacturing plants in Africa and so forth. And this is also constrained in many other smaller economies that today, say you're a shoe manufacturer or a motorcycle manufacturer or a car manufacturer, you need the supplies and the industries that come along with the supplies.
Sure.
And so the wage level is not that crucial. It's the whole industrial infrastructure that is the crucial point in manufacturing cost effectively.
It's interesting. You know what? There's a question I personally wanted to ask you that I have not some time, and that's the tide thunderstorms where they just come right out of nowhere. Anyways, I wanted to ask you, about, that there's more countries that are in strife and in unrest and protest, and I don't want to say any other time, but this is certainly a very active period of disrupting us and things like that. It doesn't seem the model of just printing money and giving it to the financial class for them to shuffle it around in their various casinos seems to be the answer. What about the idea of a people's bailout, where you could get people out of some debt, you could raise some consumption, and once you get Main Street working again, then the idea is that everything would come together. However, there are some countries that I believe that are suited for this solution, some countries that wouldn't be suited for this solution. Taking this idea, do you see it applicable in any countries that you currently see dealing with some big unrest and economic problems?
Well, I mean, I'm of course against money printing because that has been observed already by numerous economists in the past, including Copernicus. The money doesn't flow evenly into the system, and it doesn't benefit everybody to the same extent. It actually creates a very significant wealth and income inequality.
Sure.
But I'm to a large extent against debt forgiveness, because let's say you buy a car on credit, and then the government comes in and says, okay, you don't need to pay back this loan.
Okay.
It creates a moral hazard. So the next time you buy a house and then you hope the government, or you have no intention to pay the loan, you expect the government to bail you out again. So I believe it's better to let the business cycle go through these cycles, and there is a credit expansion and people borrow too much, then they can't pay, then they default and so forth, then there are losses. I don't believe the government should step in bailing out the system.
But you don't think that Switzerland should do the basic income scheme either, I'm guessing?
I'm against minimum wages in principle, because it has been empirically established that it doesn't boost anything. It doesn't boost employment. It doesn't boost the standards of living of low-income recipients. Frequently, actually, it has an adverse impact. But I also need to point out, different people have different views about the role of the government. In my view, the best economists and the most dynamic economists and the ones that will grow the most, they have the smallest possible government. And the larger the government becomes, the more stagnant the economy becomes. Whereby smaller economies have a better chance to have a large government that essentially represents the interest of the people in large economies. So we have democracies that function reasonably well in Sweden, Denmark, Finland, Norway, Switzerland, and so forth, whereas they don't function very well in large countries. And but it doesn't change my view. You want to have a dynamic economy, let the government stay aside. Have simple laws, a flat tax rate, constant money supply growth, maybe 3% per annum, maybe 2% per annum, maybe no money supply growth at all. But it should be fixed and not at the discretion of some academics who essentially never worked in their lives.
Tower types.
Yes, exactly. And so I think to give these people that kind of power, to give the central bankers that kind of power, is crazy.
It's kind of scary the way you put it out.
Yes, it's crazy.
I hear you. And the thunder is even on time.
Yes,
Marc Faber here. I wanted to ask you one last question. As far as how do you were involved in frontier markets, and you're always looking at what markets are good for investment. So how do you look at a stock or a country and decide that country is fit for investment? I mean, how do you gauge the valuation of that?
Well, it's not always obvious, but occasionally there are cases when there is an obvious undervaluation of equity prices and property prices. Say, as an example, in the late 70s, there was a boom in the Philippines and then a collapse, and then the currency collapsed and the stock market collapsed in the final years of the Marcos regime. And then by 1985, the entire stock market value of the Philippine share market was less than 500 million US. Then you could obviously say, okay, we have problems in the Philippines, but stocks are very cheap. Similarly, in Latin America, we had after 1978 a period of accelerating inflation during which the currencies collapsed and shares also performed miserably. As a result, in dollar terms, the stock markets of Mexico, Argentina, Peru, and so forth became incredibly inexpensive in the years 85 to 87, also Brazil. And so you can go to these countries and you look at the market value. At that time in 87, the market value of Argentina was 750 million US dollars, all stock market. So you don't need to be a professor at the university to see that there was a low valuation. Doesn't mean that it will necessarily work out, but at least you buy at the low level.
Well, I think that's really interesting because, I wrote in 2010, I wrote a report about like the renminbi rising would basically shift the factories to other places. And one of the places I mentioned was Eastern Europe.
Yes.
And I'm just find it interesting now that Bulgaria right now is the best performing frontier market of quarter one of 2014.
Yeah, sure.
And, how does that...
Yeah, from a low level.
Okay, so we had rock bottom levels in Bulgaria.
It collapsed like Ukraine, it collapsed and then it bounced. But the collapse before was of significant magnitude.
So is there anything in Bulgaria worth looking further into? Or is there...
Yes, I suppose that there are some properties that are interesting. I have friends, they go to Bulgaria, they think that the property market is very inexpensive. The issue is today we have, say, I think in the world something like 200 countries. And you are a manager of money, you manage, say, $1 billion. How much money will you allocate to Bulgaria? And how important is it then to your overall portfolio performance?
Sure.
Say you manage $1 billion or you manage 500 billion. Your performance will depend on getting essentially the US dollar right against foreign currencies,
right.
and getting US bonds right, and the overall trend of the stock market. On these three things. But because that's where the big money will be placed. You're not going to you cannot put $5 billion in Bulgaria. You'd be driving the stocks up 200%.
Right.
You understand? So this is also an issue with Vietnam. You can say, yeah, some Vietnamese stocks are cheap, but when you want to buy them, you can't find them.
And this was a Squawkonomics interview with Dr. Marc Faber in his office in Chiang Mai, Thailand. Marc, thank you so much for your time today.
My pleasure.
And it was an honor getting to interview you today.
Equally. Thank you very much.